Today we're going to talk about the accounting equation. And the accounting equation is assets equals our liabilities plus owner's equity. Now before we get into this, we need to define what these components are. Assets are resources of the business. They are the things a business owns or rights a business has that allows it to generate income. What are examples of some assets that a business may have? Okay, equipment would be an asset. A building that the business has would be an asset. Of course, cash, inventory. So all those resources that a business had would be their assets. What about liabilities? Okay, those are any kind of debts that a business would have. If they had a loan on their equipment, that would be a debt. If they had a mortgage on their building, that would be a debt. If they bought something on account, something on credit, and they had a bill for that, that would be a debt. So we have the assets, we defined the liabilities, and the owner's equity, that is the owner's stake in the business, or it's the residual value of what the owner has in the business after it satisfies its obligations to creditors. If we had an asset of a house that was worth $150,000 and we had a mortgage of $100,000 on the house, you commonly hear that a person has $50,000 equity. Well, this is the same principle that we have in business. We have the asset of $150,000. It has to equal our liabilities plus our owner's equity. And just like the example of the equity in a home, this is how a business would be. Assets have to equal liabilities and owner's equity. Or another way of looking at it is if we converted all of our assets into cash, and then we took a portion of that big pile of money that we had here and satisfied our creditors, whatever is left over would be the owner's value or the owner's stake in the business. It would be the residual amount left over that belongs to the owner. If we take Donald Trump as an example, he has these various assets, commercial properties of $1,370,000,000, private clubs of $1,220,000,000, some co-owned properties of $652 million, some developmental properties of $261 million, cash of $270 million. His total assets add up to $3,773,000,000. Well, on these buildings and other things, he has debts of $379 million. So the difference between his assets and the liabilities is what we call net worth. So when you hear that Donald Trump is worth $3.3 billion, this is how they would calculate that, taking the assets minus the liabilities, and that's net worth. For a business, we call that the owner's equity. Or for a corporation, we would call that stockholders' equity.